Quick daily market analysis for Thursday, February 26th. Hi guys, I'm Don. I'm a financial analyst and a trader. And today, American markets were down all three indexes there, with tech leading the way down, with the Nasdaq sliding. That's on the back of Nvidia's earnings coming out after close yesterday, which beat on all estimates and forecasts. However, traders and investors decided to sell the news. Particularly, the investors didn't like the fact that there was no talk from the company about their concerns over the China business. That wasn't mentioned at all. Obviously, that just gave traders a reason to indiscriminately sell the stock. And tomorrow we have the core producer price index there coming out, which is a inflationary gauge there. So that will give us a look into inflation in that sector there with the producer pricing. That obviously will give us a little bit of an idea how the Fed might sort of receive that as far as to its overall sort of monetary policy there, as there is sort of an indication that over the course of the rest of the year there will be some more easing. And over to European markets, where stocks went higher. That's on the back of positive corporate earnings that came out today. We did have a reading out from the ECB on loan activity within the Eurozone, showing that it is slowing, and that's raising concerns that obviously business is slowing and it could impact the wider economy. And over to UK markets, where stocks rose. That's on the back of a strong earnings performance coming in from Rolls-Royce. The company had an increase of 40% in profits, which helped boost sentiment there in the market, pushing stocks higher. We did have that out from the UK government saying that 1 million young Britons in the UK are either don't have a job or aren't in any sort of school, which is raising concerns about the weakness of the economy and overall going forward about the how the economy is letting down the youth. And over to Canada's TSX, where the index is one of the best performing markets today. They're rising well over 1% in trading. That comes from strength in the energy sector, but in particular from the financial sector, with three major banks releasing earnings. We had TD, CIBC and Royal Bank releasing strong earnings there that beat on estimates. The company did sort of flag going concern about a rising loan loss provision there, obviously with concerns over a weakening consumer that will impact those banks. And tomorrow, traders and investors are pivoting towards a GDP reading, which will give us a reading in December of economic growth, and that will also affect any sort of possible move by the Bank of Canada.